Hi, welcome. There are two confessions I want to start this session with. One is I'm a dabbler. I'm an expert in very little, but I'm interested in a lot of different things. The second is I like to write. It's true I like to write to be read, but I also like to write when I'm confused, when I have a question to which I don't have the answer, because I think the practice of writing about something and reasoning your way through is the way to find an answer. So that's the preamble to what I'm going to say next. I teach two classes at the NYU Stern School of Business. One is a corporate finance class, the other is a valuation class. And about 25 years ago, and I've taught this for 40 years, these two classes for 40 years. But about 25 years ago, towards the end of the 1990s, the head of my department came to me and said, "We have a new class, we'd like you to run it." And I said, "Run it? I mean, what does that mean? I usually teach classes." He said, "Well, you don't have to teach this class because it's a class composed entirely of outside speakers. And the outside speakers were going to be successful investors who would succeed in the market." Now, being in New York gave you an advantage then because so many successful investors lived or worked in New York. So I went about coming up with a list of speakers I would have for the class, and I came to my first realization. There are very few successful investors. You're saying that's not true. I see successful investors all the time. It's true you can succeed in a year, even 2 years or 5 years, but most of the time that success comes from luck. But when you look at investors who've succeeded over the long term, there are relatively few of them. So that's the first recognition. Most people who try to beat markets don't, but there are a few who do. Now, the second realization I came to as I went down that list of people who succeeded over the long term is they came from entirely different sets of the investing spectrum. Some were value investors, think of Warren Buffett, some were growth investors, some were traders. So it was actually a technical analyst / chartist who'd been successful over the long term. So the second recognition I came to is there's no one path to success. There are multiple ways in which people have been successful in markets. And they bring in very different views on how markets work or don't work so they can take advantage of them. The third recognition I came to as I talked to each of these speakers, because I got a chance to talk to them for 20 or 30 minutes before each class and after the class, was even though they were very different in their views on markets, each of them had a core philosophy that was theirs, that they believed in. Now, when I talk about philosophy, I'm not talking about a strategy. Buying a low PE ratio is a strategy. But having a view of why markets might underprice companies with low PE ratios is a philosophy. Very different philosophy, but each of them had a philosophy, a well that they could go back to when a strategy stopped working. So after the class was done, and thank God I taught it only once, I started putting things down on paper, and from that was born one of my books, the Investment Philosophies book, published by John Wiley. And this book is not about finding the best investment philosophy, because I don't believe there is one. It's about describing different philosophies. I start with technical analysis and charting. Often we give them short shrift in investing classes. Value investing, growth investing, market timing, arbitrage. So essentially looking across the spectrum. And with each one, here's what I tried to do. I look at the strategies that come out of the philosophy, but more critically, I think about the makeup, the psychological makeup, and the capital, and the other characteristics you need as an investor would succeed with each one. Why am I doing that? Because most people who try to imitate these successful investors don't succeed, right? Think of the hundreds of books on Warren Buffett and ask yourself, how many other people have the returns that Warren Buffett had over the long term? Very few. There's many a slip between the cup and the lip, which means that you can try to imitate an investor, but if you don't have the personal makeup to pull it off, it's not going to succeed. So what is this book about? It's a book about describing philosophies, but more critically, if you're the reader, it's a book about you finding your best investment philosophy. Which one will that be? It depends on who you are, how much capital you bring to the game, why you invest, and what your psychological makeup is. That first edition came out about 20 years ago. I updated to a second edition about a decade ago, and I just finished the third edition. You're saying, why do you need new editions? It's not like investing becomes new and different. It's true. Much of investing stays the same. Much of what we see, we've seen before. But there are new things that happen in markets that give rise to new philosophies. For instance, in the last decade, you've seen the rise of the crypto trader, people who trade Bitcoin, who become very wealthy trading Bitcoin. Who am I to say that's not a good philosophy? I actually did not pay enough attention to gold and collectibles in the first edition. And there are people out there who succeed investing in gold and collectibles. It might not be for me, but it works for them. So with each edition, I've tried to bring in philosophies that I've either paid not enough attention to, but are newer philosophies. And in the third edition, as I said, I brought a chapter in on alternative investing, which includes cryptos, gold, collectibles, because that is a philosophy that some people adhere to. I hope you get a chance to try this book out. Not so much because my writing is brilliant and path-breaking, it's not. But maybe it can give you a way of finding the right philosophy for you. If you can accomplish that, my job is done, because in a sense, once you have that core philosophy, you will be able to come up with strategies that come out of that philosophy. I hope you found the session useful, and I hope you get a chance to give this book a try. Thank you very much for listening.